Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Friday, April 2nd, and today we have an interesting situation where the non-farms payroll is coming out on a Good Friday. So I said yesterday I don't think that anybody's actually closed off of this, but I was wrong. The source that I was looking at just didn't list it for whatever reason, but apparently my understanding is that the stock market will be closed today. But the CME is still going, and we've got futures going here. Liquidity in the treasuries at the moment is not good. It is about half what it was yesterday, and we've seen some pretty good activity in the treasuries, especially when they were kind of buying it back up over the past week. So only seeing 1,500 on there isn't necessarily very good. Now, that said, there may be a lot of latent liquidity out there. There's this is a pretty big number for starters, and everybody's going to be looking at it. They're just not going to want to put the orders out until the numbers come out, right? So that's what we got going on over there. If we come over, we'll just take a quick look at the markets, although not a whole lot has changed. So yesterday, E-mini had a huge ramp. So we got out, we caught some of this. We got out somewhere over in here. And then later in the day, I was actually more like up here, right? And then, later in the day, they just kind of never gave up. And into the close, there was a huge ramp. Now, remember that we see those huge ramps often off of options activity, right? Because if you have options on, you want to ramp it up into the close to improve your mark-to-market positions so that tomorrow you can add on more leverage, right? So I think that that's what's going on here, and people are going to try and play this non-farms with the options. All right. 10-year was did come up quite a bit yesterday, but this non-farms has the potential to push the treasuries down significantly. So we shall see what happens. Oil having a wild night. It's kind of all over the place. I'm not really sure why that is. The news desks aren't really open, so I haven't seen anything about oil, but it's been going. Gold and silver continuing their runs yesterday. It wasn't huge, but it was a good amount up there. Okay. They're almost to the point. I mean, if we have another good day today, or maybe Monday, Tuesday, get like a silver above 25, I think we could get some justifications for swing trades long. Right. And copper even recovering a little bit yesterday too. So generally speaking, even though we've got this non-farms and a holiday and everything, there is a lot of risk appetite out there, it appears. They got rid of the big bad margin call, and now everybody wants to lever up all over again.
Earnings year on year.
Kind of makes you wonder how many other people are there out there like Archegos, or however you pronounce it, that are also doing really irresponsible things but just haven't been caught yet.
0.1% previous.
Gotta wonder.
US private payrolls forecast 643k, previous 465k. US manufacturing payroll.
So let's come in and look at what we're looking. Average hourly earnings. Let's see here. Where's it month over month? Hourly earnings month over month, they're looking for a reading of spot 1 versus a reading of spot 2. So if that number is higher than expected, and I think that there's a good chance that it could be, that could really push the treasuries down. And then you've got the actual non-farm payrolls. We're looking for a reading of 647,000 versus a previous reading of 379,000. So they expect this one to be really big. But some of the tea leaves, some of the reports that we can look at to try and estimate what the non-farms may actually be, some people are estimating it'll be as high as 1 million. So
on nuclear obligations and sanctions lifting.
Blow my nose here.
The EU official goes on to say there will be no direct talks between the US and Iran. Will be proximity talks.
All right, that's a little better. Okay, so they have, oh wow, they have really thinned out this a little crazy. Well, I think that you could probably come in and sell it. Hey, Mike, how are you? Oh, you can hear that. I'm sorry. I should turn that off. That is financial juice. But you're not supposed to hear that. You got to pay for them. Sorry. You're going to turn that off. I had that unchecked because we were watching those TikToks yesterday. Yeah, it should be a short day. I don't know. Yeah, they were saying that they're open for an hour, but I don't know if that's all of the instruments or just the E-mini or what. I mean, the E-minis are open. Here's the problem. The E-minis have already been ramping ahead of this. And the treasuries have not come down ahead of this. So I think, if this number isn't really above expectations, the E-mini might actually sell off of this. But the treasuries could sell off of a good number. Even if it was just like in line with expectations, or if the average hourly earnings were up, I'll turn you guys on auto read. Wow. Want a YOLO? I say YOLO. YOLO! Sim order, okay? Just want to be clear, that is a sim, or what I'm doing here. Very irresponsible. Very, very risky. Would only do this if I had a really big account.
Vlad Stolarov says Paris Hilton said buy Bitcoin.
Oh, what? Really? This whole thing is getting, we are in the bubble of all bubbles. No doubt about it.
Vlad Stolarov says now we can expect BTC to 50K.
10K lower zone.
Vlad Stolarov says 10K lower zone.
Okay, you can hear lots of... Okay, 916K. Higher than forecast. Was not so.
Mike Salisbury says yup, bubbles all over.
Okay, the average hourly earnings year over year was lower than forecast.
Vlad Stolarov says lol.
So just know every time you hear that Space Invader
Vlad
sign,
Stolarov says I am not touching anything.
every time you hear that Space Invader sound, somebody is stopping out of a position with slippage. Well, not necessarily stopping out. We can't prove that, but it's likely that somebody is stopping out of a position with slippage. So pretty good numbers overall, and the E-mini is going up quite a bit off of it. So it wasn't over 1 million, but it was higher than the expected.
Vlad Stolarov says I know some retail was wrong yesterday shorting this mess.
Really? Who would have shorted this, man?
Mike Salisbury says really? Did you program that one?
Yeah, this is a new one. I should add it into the speculator
Vlad Stolarov
stuff.
says right after 3:30 p.m. plus.
You know, I've been testing it for a while. I would say
Vlad Stolarov
that
says on Eminus.
I've tested it enough that it's a solid indicator. So a lot of volatility, even in the treasuries. I can see the dollar actually rising a little bit.
Mike Salisbury says nice Seth.
Yeah, I'll add it into the indicators on speculatorseth.com. Maybe I can do that this weekend because I've been testing it for a couple of weeks now, and I would say that it works pretty solidly. There was a couple of issues with it. I had to do a few weird things to get it working correctly, but basically, to be like really specific about what it's doing, if the E-mini skips a price, then it makes a sound. And there's a sound for if it skipped an offer or if it skipped a bid. So that's how it's determining that. So I'm kind of making the assumption that if it skips a price and then you see volume at, a price higher, that's probably somebody catching slippage, or stopping out on slippage. It could be somebody catching slippage on an entry too, but essentially every time that happens, there was slippage.
Vlad Stolarov says in a liquid market, they gonna slip ya.
Yeah. And it's kind of interesting because I can go back,
Mike
I
Salisbury
know.
says, yeah, makes sense.
I know when that sound happens and stuff like that now, and I have a pretty good idea of the kind of spots where it's going to happen at. But I can remember many, many times trading E-minis and catching slippage, I was like, man, how was I catching it that often? But I just happened to be trading in those spots. But now I know. I think I would if I were to trade that style again, I would be trading it differently, knowing where those slips are. Okay, so the treasuries are calming down a little bit. The E-mini took a pretty good jump up there. They rose a good 10 points. So even with that ramp yesterday, a good 10 points up in the E-mini. But can they hold that is kind of the question. How many people are going to take profits off of it, I think, though, that it's entirely possible that they just balance out up here. So there was a big order at a point here in the 10-year, but it kind of disappeared. Unemployment rate fell to 6%, right in line with expectations there as more people get vaccinated and go back to work. U.S. employers added the most jobs in 7 months during March as more vaccinations and fewer business restrictions supercharged the labor market recovery. Now, I did look into that stochastic calculus stuff too and found a book, so hopefully we'll be able to write some stuff off of that
says
too.
That's how we go to the moon.
That's how we go to the moon. I don't know if the E-mini is going to go to the moon.
Stolarov says supercharged.
I think the dollar is going to have to work some stuff out here because the dollar was on the way up, but it is falling down right now. I really believe that there is a high chance of the Federal Reserve overcooking the economy because they're being overly dovish. I do. Everything about this economy looks like it is going to be just fine in that it doesn't need the fiscal support. It's not as fragile as everybody thinks. I don't think it's like the same situation as I think they're kind of acting like they did after the financial crisis. And I don't think that it's the same thing. Like it was right to be, provide tons of support during the pandemic. But now that the pandemic is going away and it looks like we will be done here by this time the summer comes along, I don't think that they need it. And the issue that I think you're going to have is that you could have had like a really great recovery coming out of this in the fall, and the Federal Reserve is going to have to clamp down on everything and kind of cut that one short. And they've pumped everything up so hard that, it may actually be a detriment in the long.
Live Action says number of analysts saying the same and expecting sell-off soon.
You think so? Well, there's been like the people that have been prone to say that all the time anyways. But this is the first moment where I'm looking at it and I'm really, well, no, I take that back. There's been so many times in the past year where this thing just goes up and up and up and up and up. And I'm like, guys, why, if the economy is so great, why do you have to spend so much? Doesn't make sense. It's a fair question for Biden right now. They want a $2 trillion infrastructure plan and all this other stuff. Now, don't get me wrong. I think that we need the infrastructure. Okay, so cool. I got that 16 tick winner. That was awesome. I think the infrastructure is needed, but I don't think that the debt is needed, and I don't think that the stimulus is needed. I don't even think that last stimulus was really needed. Maybe not even the last 2 or 3 stimuluses. The whole thing just seems crazy to me.
Kyle Bertoli says hi there. What means Globex closed in CME's calendar even if market is clearly open?
So I think that just means that it's not gonna stay open until. So let's go and look at the CME calendar. Since we got out of our trade, compact Excel. We really should have done this yesterday when you guys asked me, and I don't know why, but sometimes I just dismiss you guys way too easily. I don't know what to do about it. So this is second or third. The other time that this happened was with Bitcoin. Or no, with GameStop, and people were pointing out that the report said that the open interest had died, and I kind of dismissed it too easily. Okay. So, interest rates.
Kyle Bertoli says I did check the same Excel file.
That's Thursday, our regular.
Mike Salisbury says this action is insane, almost like it is catching everyone long, then it'll wipe everyone out once the last stimulus check has bought GME.
Okay, so this is saying that it's going to close at, so Bitcoin and equities are going to close at 7:15 my time, right? 9:15 Eastern time. And the interest rates are going to close at 11:15 Eastern
no,
time.
Wait, I checked the complete file. It says Globex closed on Friday.
Well, here it says product close open. This right here is just like when is the close of that session and when is the open of that session. See, so this is when the extended session closes, usually that 4 o'clock Eastern time, right? or not 4 o'clock, 5 o'clock Eastern time.
Kyle
And then
Bertoli
it
says
opens
the
back
other
up.
File, not the compact.
Yeah. But here, that's, so it's saying Thursday and then Friday start is fine. And then today they're going to close them all
SMO
early.
says hi there.
Hello. So we could work on something. We could investigate something. I've done a couple of interesting back tests lately, but they keep coming back to 50%. That's happening a lot. It used to be that they would always come back at 45%. Now I've been finding a couple of indicators that actually are a little bit better, but they're not enough for you to make money with commissions. 50% is not enough. Could be part of a larger system. I want to get into that stochastic oscillation stuff, but I'm going to have to read a book and learn a lot to figure that one out, because I don't
SMO
really
says
understand.
I am currently in a long position and the funding is at 0.2%. SMO says, is that normal?
I'm not sure what you mean by that exactly. Which platform are you using? That sounds like something in
SMO
Rhythmic or
says
CQG. Oh, I see. So, I don't know.
Vlad Stolarov says
It's
crypto.
crypto.
SMO says Bitcoin prep.
So I don't know why the funding at spot 2%, that must mean that you're using margin of some sort, right? You got to be really careful with, well, you got to realize that you're putting on a lot of risk trading
SMO
cryptos
says
with margin.
1.5x. SMO says yes, I use leverage. SMO says not that much.
I had a, I can turn you guys off of read here for a second now. I had an interesting thought revelation last night, because the more that I backtest things and I find strategies that seem to work, it seems to me that the market tries to be as efficient as possible. I would say that there are situations where it is very inefficient, and particularly situations surrounding news being the place where I see most clearly that the market is not very efficient, right? So you can get good trades off of news. Here on this one, I felt pretty confident that they were going to beat the estimate, and so I took a trade going into it, and hey, If I had taken it on micros, I could have taken that on micros and it would have been a great trade, you know? Just saying. But you're putting on a lot of risk when you do that, right? And so the more that I look at it, the more I'm realizing that like man, you really have to find like a really dramatic inefficiency to really get something that performs differently than the underlying instrument. And so really, almost every strategy that you're looking at is really taking the instrument and then saying, do I want more risk or less risk? And then everything kind of scales based off of that. If you take less risk, then you're going to underperform the instrument, but you might have smaller drawdowns and things like that, right? It's stuff like that. Well, I think that the same sort of principle that the more risk you take on, the higher your potential profit is, really applies to strategies too. Think about it. If you're using a strategy that is established and everybody knows about, you're not taking on a lot of risk, are you? You're doing something that is established and well known, and so how it performs compared to the instrument should be well known, and therefore it's not taking on very much risk. Therefore, the amount that you're going to make from that edge is less. Whereas if you are doing a strategy that you have developed and is based off of something completely different and isn't really related to anything that's already existing out there, that is a greater unknown, that is more risk, and so your potential to make money off of that is higher. But it's also the potential for you to lose money off of that is higher too. Everyone wants the hard edge, no, really hard to find, right? Yeah, it is. Yeah, that's exactly it. He's saying that, you know, on the knife, people want the hard right edge, which is like the brand newest, most amazing edges that are going to turn you into millionaires. And it seems to me that in terms of like programming an automated trading strategy to find an edge like that, I'm not skilled enough to do that at the moment. I found some strategies that are okay. The simple method is I'm not so sure if I agree with that, but so here's another thing is that if you are trading a strategy that you can't necessarily be automated and is based on your intuition of the news and the market conditions at that time, that's even more risk, isn't it? Right? But then you can make a ton of money off of it. So I'm kind of realizing, well, I mean, it's what I was saying with news to begin with, right? Trading news in particular can be really advantageous because you can get extremely skewed risk rewards and you can get extremely skewed win rates, and you can really get into a situation where you get a win rate over 50% and a high risk reward ratio or R factor trading news. But there's also going to be increased volatility, which means that you're probably going to have to put more capital at risk to trade news, right? Like dollar cost averaging, people have been adding in the 401k until we don't have economy till it still works. Well, like that's the thing is it seems to me, that buy and hold is the optimal risk reward strategy, right? The risk adjusted return that you're gonna get is going to be the most optimal with buy and hold. The only way that you ever get better than that is by finding a serious inefficiency in the market. And I mean, it can't just be an inefficiency. It has to be a really significant inefficiency in the market. And I kind of question if that degree of inefficiency really truly exists anymore, or at least in ones that could be taken advantage by retail traders, right? But it's that principle. The more risk you take on, the greater your chances of, or the higher your potential profit is. Not the greater your chances. The more risk you take on, the higher your potential profit is. Kyle says, well, you can just trade without stops, Yeah, you can. But that brings us to that video. Who was it? Was it Vlad? No. It wasn't Vlad. I think it was... I can't remember which one he is. It's somebody that's not here right now. But they linked us to that Nassim Taleb talking about the Kelly criterion. I watched that video. I was like, oh, yeah, I know this stuff. So what the Kelly criterion was saying is that given a certain win rate and equal risk reward, it was showing a graph of here is the optimal amount to bet per trade to maximize your profits. And if you risk more than that, and this is kind of the counterintuitive result of the Kelly criterion, according to Nicholas Nassim Taleb, although I kind of feel like that it's like a no-dust sort of a thing, is that if you trade more than that optimal amount, regardless of how effective the win rate, and no matter how good the bet is, your risk of ruin basically goes to 100%. That there will be a situation where you lose so much of your portfolio when you do lose that you blow out, right? So that's why people come down to saying that it's really all about managing risk, right? Can we post this video in the Discord? I'd love to see. Well, yeah, let's see if I can find that again. He talks a little bit about the math of it. It's this one right here. I'll post it here in live streaming. Oh, that reminds me, by the way. We can, the Discord yesterday enabled a feature, basically to compete with Clubhouse. So we should turn that on. Open the stage. Hey, there we go. Wait, am I? Oh, yes, I am. So if you want to try this feature out, guys, we can see what we can do, because I think we've done our trading, so we can screw around. So if you guys want to chat, we can come in here. You come into Discord, and there's a live stream channel, and we can do that in here, and we can try. So I guess the way that it works is you can come in here, and then if you have something that you want, oh look, show requests. Okay, so Neff wants to speak. So I don't know, Neff might say something really, really silly, but let's invite him to speak and see what happens.
Hello.
Hello.
It's actually stick. That is the stick.
That works so well, don't you think? It is such a smooth system.
Yeah, I guess it is. I don't know.
Quite impressive. By the way, you've been around in the Discord for quite some time, haven't you? So your name seems familiar to me.
Yeah, no. But I have 2 accounts. So.
Oh.
Tell me something to type in your chat. I'll prove it's me.
Wait. What do you mean in the YouTube?
I'll fucking type it's me or something.
Yeah, just say it's me, Neff. Oh, it's Stickball. Now you were the one that linked us the Kelly Criterion video yesterday, wasn't it? Was that you?
Yeah, the Taleb one, yeah.
Yeah, it was. I mean, it was something that I was familiar with, but it was still a really good video. It was a really great video.
Yeah, I've been around for 3 years.
Oh yeah, you've been around
on the stream, yeah,
for a long
time. My chat history. I was like, 3 years ago. So it's 3 years plus.
Oh wow, Yeah, and it's great because the thing that's great about this, because I've wanted to do like have people come in and talk on the live
Yeah, I
stream.
missed your last one. Your
Yeah.
last like talk.
Well,
Yeah.
last time that it did it, I don't know. It was just kind of like, in order to do it like this, it was a lot to manage, you know. With this way, I feel like we could literally do it every day if we wanted.
You know, I think what made me click on the server is the fucking icon in the Discord. It's like that little top right thing. By the way, if you want me to stop swearing, just let me know.
Oh, you're fine. It's an adult channel. You used to think that
See the
YouTube
little
would
icon top right in the Discord profile picture of the server. Yeah, that's what like invited me to click it. Like, oh, what's this?
Oh, right. Well, when you're in here, it's like, I think that what I see might be a little different from what you see. I'm not sure.
On your screen, on top left, like of your Discord, that's the feature stream Discord, right? Like
Oh,
top left. Yeah, there. See that icon
Mm-hmm.
on it? Yeah, everyone can see that. So anybody will be like, "Oh, what's this?" Now click it and they'll join.
Oh, really? So is it when you click that thing in
that's what happened
particular?
to me. I mean, wait,
Really? But nobody else clicked. I don't know, guys. Mike says, "Thanks, Stick." Thank you, Mike. Mike is somebody that's been around for a really long time too. Not in every day, but long time watcher. Is it E-Mini going to come back down here a little bit? It's kind of doing it. There's definitely going to be profit taking today, right? I'm raising my... Wait, so did it have to... Oh. Wait, so why did it...
Oh, because I left to see if the icon is still there if you leave.
Oh!
So I was just trying to see, because that's why I clicked on the server, to like see what the hell. Because I didn't think you'd be streaming. I thought it was Good Friday, no stream.
Oh, well...
Still trading? Bonds still trade today?
So Kyle, he was saying that if you click on it, it should like automatically bring you into the voice channel.
You gotta be moderator. Am I gonna make the moderator of the podcasting when you start it?
What do you mean?
Oh, like when you created it, right? You select like who's gonna be the moderators for the stage moderators.
Oh, right.
Yeah. So you have a badge right next to you, and it's like, well, top right of your like thing. It's like stage
Yes.
moderator.
Yes. Yeah, when I did that, because I guess the way that works. So this is another interesting thing, is the moderators can start the live stream, right? So like
The live stream on YouTube.
No. Just the live stream here in Discord, right? So I think I only added the moderators, which aren't actually publicly visible. Oh my gosh. It reminds me of something that's so funny. So there is another channel, another YouTube channel that constantly gives us grief that I'm sure you're aware of, right? And one of the things that they were trying to bash us with was that one of the people that has the what is it called, the degenerate gambler tag, was somebody that this other streamer didn't like, right? And he assumed that the degenerate gambler tag was like moderators. So he's going on and on about how these are the people that Seth lets moderate and everything else like that. And I'm like, actually, no. I'm like, there's only like 3 or 4 people that have moderator privileges. I'm the only one that like actively bans people, and the system does not show them. It doesn't give them a color or show them on the side or anything like that. They are secret. I guess they're secret police or something. But they only take care of spam.
Like there's more mods than there are, so it's like, oh shit.
Yeah, no, the statuses are totally just to be like, people have been around for a long time. Is that Peter? I think it was, I don't remember who it was that they were complaining about, but oh man, I've seen so many things. So do you guys remember I was telling you guys a week or two ago that I ran across a TikTok account where they were using NinjaTrader, and like every single freaking video was like, this is how much money I made today in futures, and I'm like, they've got to be full of crap. But then I clicked off of it and I couldn't find it again, but they showed it to me again yesterday. And so I like tried to deep dive in on the account, and oh my gosh, this lady is so brazen. Like, you go in and look at every NinjaTrader result that she posts, and when you really, if you really understand, well, here, I'll show you guys. So like you come over here and you look at like all of the strategies that are going on. So they always show this window. They always show the strategies windows, never the accounts window, right? And then their connection will always say live, okay, which means nothing, right? Because you can name the connection. And then the account names they'll have like multiple accounts that all start with their name, right? Which a live account usually doesn't start with your name, right? A live account is usually like a really weird number. And so these people were showing these results and kind of claiming that they were live results, or at least leading to the impression that they were live results. And based on the screenshot, I'm pretty sure that every one of those are sim. And probably what happens is they have a bunch of strategies running, and then the ones that like blew out that day or did really bad, they just, remove them. Oh man. So I'm like sitting here like, the account was Bold Approach, I think. Here, I'll show you guys the website. So I'm just saying, can't confirm all of that stuff yet, but like I'm super suspicious, right? Here it is. Here it is right here. Here's their website. So, and they've got like robots, Algo here. And you can buy this robot for $1,000 a month. Right? That was my first thought. You think it should Guru Leaks? I wonder if he's ever encountered that. Actually, I wonder if he would.
You put your tips in. This is a tip. Give him a tip.
You think he'll respond to direct messages? Let's see here.
He says, we appreciate your tips helping to expose fraud and deception. So, yeah.
Let me try.
Probably already exposed them. Who the fuck are they? What's the TikTok?
I think it was like Bold Approach was her TikTok. Let's see. Yep, that's her right there. Okay. Message. Okay, let's send him a message. And she's got 40K followers too.
Holy shit. Really? Oh my god. It's crazy, actually.
It is crazy, right? Mike says, nice, good work, boys.
Let's see if it's legit or if it's just a fucking catfish. So I'm gonna like look up, I'm gonna search, reverse image search the fucking profile picture.
Oh, well, actually, that's a good question. I mean...
Oh, I guess she talks in her videos, doesn't she?
Yeah, she talks in her videos, yeah.
Oh, okay, no, she's legit. Is it? I don't know.
But you're right. I don't think I ever saw one where you saw her face in it. They always are showing screenshots and stuff. Yeah. Now, the other thing that was crazy, the other thing that I thought was funny, here, this is what will really, really make you laugh, is if you go back far enough, she's like, I learned how to program algorithms 8 weeks ago, and I'm already making tens of thousands of dollars.
Well, I gotta find this. I'm on a TikTok. Let's see. It's like,
Oh my gosh. 40K, that's like so crazy. Now, Steve, he's been doing okay. The video that we made yesterday, I thought the video that I made yesterday was one of the better ones, but he only got 127 views off of that one for some reason.
oh wait, there is a video of her face in it, isn't it?
Oh, there's one
no,
right there.
it's someone else. Yeah, there is. No, yeah, she shows a face. So yeah, she's gonna get prosecuted. Yeah.
You think so? Well, this is where it gets kind of weird because
she knows what she's doing.
Yes, that's me. Oh, Mike hasn't seen Steve here. Let me show you my most recent Steve video, Mike.
This is Stock Market Steve here in my Lambo to give you another expert day trading tip. One of the most common questions I get from my students goes,
Hold on a second.
I am in a losing position. I thought you said this stock was a winner. Well, here's the thing, guys. You've got to be patient. You haven't lost any money unless you sell. So, if you are in a losing position, buy more. And if you are in a winning position, let it ride. Just let it ride. But remember that stops are for suckers. The way to make money day trading is to never be wrong. So, if you want to never be wrong, make sure you follow Stock Market Steve. And remember, don't be poor. This...
Yeah, that's a new one.
I turned the stream off. I mean...
Oh, yeah, no, it's fine. No,
link it. I want to see it.
Oh, here, I'll link it here in... where's the best... So, one thing that I am noticing about this is that I wish that on the live stream here that there was, like, a channel associated with it. Here, I'll link it in... Where should I put it? I'll put it in the lobby. Put it in the lobby.
I was expecting you to put it in the stream, but...
Kyle says, I think you shouldn't put the parody disclaimer on the video. Just put it in the bio. Yeah, so, like...
Yeah, did you see the TikTok I linked, by the way?
Say again?
The TikTok I linked in the chat. Look at that one. I think she leaks the room or something. Because she's showing the hyperlink.
Oh, this one right here in YouTube chat. Okay.
Is she leaking?
I'm gonna mute it
come
from
join
the
the
stream.
room, but is it like a private room? Oh, it's Slack. It's a Slack room, but how do you?
Yeah, it's a Slack room.
I actually want to join it. I really do.
Oh, wait. How much is it?
We have to pay it again.
Oh, of course.
Oh, of course.
They have 2 experienced traders, guys. $200 a month. Oh, what's this? E-minis slipping here.
Why'd you do this instead of drop shipping? At least the drop shipping ones is like you don't have to do anything. It's like 500K a month. Income.
Right. Well, it's like you know how the drop shipping scam works, right? So
yeah, I know.
You go and find something that's really, really common item, and you go and you drop ship it, and a lot of people will buy it no matter what. But your costs are really high too, and so you're not actually making any money, but you can show that your revenue is like millions of dollars, That's how a lot of people.
Yeah, you just have high turnover. Your profit is like crap. You have to be good at AdWords to do that, because if you're like overpaying for ads, I guess that's what it's all about. It's just AdWords.
Yeah, well, so if I were to get into a money-making venture, you say you're a person that just wants to straight up make money.
Yep, I'm a person.
Yep, you're a person. You want to just straight up make money. I would do some sort of a service. So one that I'm noticing that is getting pretty popular is just advertising on Facebook, right? So should you really pay, hundreds, thousands of dollars a month to somebody for them to manage your Facebook ads? Well, it's definitely something that you can do yourself, right? But it's also definitely something that some people are better at than others. And so if you spend the time to get good at it and you sell it as a service, you can make a ton, right?
I know someone who taught himself AdWords, and he's actually really good with it. Just taught himself it.
Oh, yeah.
He has his own like e-commerce business.
I've actually seen some people...
Sells contact lenses.
He sells contact lenses.
Ones. There's colored ones. There's like ones that are for parties. No.
Oh, yes. Oh, man. Well, and the one that I found that was really crazy that people do is they'll find services that have like affiliate programs of some sort, but aren't doing any AdWords advertising, and just create the AdWords for their affiliate link and make money that way. Now that's
I just found
really
her
crazy.
stream.
Oh, is she streaming?
No, YouTube. Yeah, she has a YouTube. In a stream.
Oh, yes, I did see that there was a YouTube, but I didn't look at it.
Where's the YouTube? Let's see. Old Analysis LLC. All right, let's see.
Yeah. No, it's right up here at the top. But
I found her.
Because they have a and maybe it's on their website.
One of her YouTube videos. Yeah, it's there in the chat. Stream chat.
There you go. Oops. No, I didn't want to click that.
On Ninja Trader, how to get started video. That's good for me.
Oh, there you go.
I want to go to Ninja. Maybe this could actually help me.
Why does it do that? What if I try and click a
YouTube channel?
Yeah. If I try and click the link, it went in YouTube because I'm on YouTube Studio. It thinks that changes the domain.
Yeah. There you go.
It's retarded.
Channel.
Oh, there you go. Let me try that.
Sorry if I mumble a bit. I'm a bit tired.
No, I can hear you just fine. Sometimes I'm talking over you though. With there's a little bit of lag.
You're fine.
Oh well, it looks like their channel is fairly new.
Videos? It's not new. It's like it's like 10 months old.
Oh, maybe I'm just not seeing.
Videos.
Oh, okay.
Click on videos.
I see.
Why don't you do that?
I assumed that there would be showing me more. Oh, that's funny. So they don't have their profile page set up very well. Is basically the gist of it.
Mm-hmm.
And then
she
they
has an Instagram linked on there anymore.
Oh, I'm sure they do. Man,
no, they're all broken. The website, about page is broken, and the Instagram's broken. Broken link.
I some of the worst stuff that I've seen has been on freaking Instagram.
Yeah,
oh my gosh!
Legit, actually, she has the auto trading algo journey. I am a futures day trader, and I started my journey on YouTube in 2020. I'm now starting. I found my account with 25k. I have been working with a developer to create the algo shown in these videos. You will see the use of the algo on a 1-minute chart on products such as NQ, ES, YM, CL, GC. I have a free Slack group and give more information on the algo. If you want to join, send me your email. Free Slack group. It's free, the Slack group. I knew you didn't have to pay for it. So she could certainly give you the link. Yeah, I gotcha. Send her my email. I send her emails.
She might have.
Let's go
That
to
might be
Slack.
like old stuff, though. It might have changed now. So the reason we were getting the slips is because they were about to close the e-mini. So the e-mini is closed, and it closed at 40.25 and a quarter.
Right.
But the treasuries will still go for another hour, I think. Yep. Well, that
Yeah,
whole
like this podcasting is actually good. It's like
yeah.
no random person can join and be like,
All right. But oh man, when I was if you go through the TikTok, here's the thing that irks me about. Well, okay, so there's I'm like getting like way ahead of myself. There's like this whole stream of stuff that wants to come out because I get harassed by some people, and a lot of people just are showing me other people out there that appear to be scamming everybody all the time, right? Mm-hmm. So if you come to Ninja Trader, oh man, I don't know how to find it. Hold on, I'll find it through my email.
oh, on this one video, the Ninja Trader how to get started. I sent my application yesterday and I'm waiting now. I can't wait to start using the algo. And she replied, "Thank you so much. I have more of these, and when you enter the group to explain everything else."
Wait, she's already responded to you?
No. A week
Oh.
ago, she responded to someone. So I'm gonna send my application in. I don't know where.
I gotcha.
I think it's on the website.
I gotcha.
Oh,
I gotcha.
She seems kind of legit. Actually, I haven't seen anything that she's like fake.
Well, the whole thing so there's
sound like leaked sim trade.
Yeah, so here's the things that I see on the account that I think flag this as potential fraud. Okay, one, they appear to be showing sim results. Like the way that they're posting the results is a way to actively hide what their account is, right? So it looks to me like what they actually have is a bunch of strategies all running off of a live connection, but trading on sim accounts. That's what it looks like to me. And then the fact that literally every video is just bragging about performance. And the other thing I
definitely think it's more likely to be a scam.
Right.
Now, about page she writes about herself, but yeah, go on. I'm sorry, cut you off.
Oh, no. Well, so the other thing is that there can kind of be a mix, right? So something that I find happens really often is somebody will realize, well, not realize, they might not even realize that that's why they're making money, but basically they figure out that if you take on excessive risk, you can win most of the time, right?
Well,
so
like, you can like take on excessive risk for like a year, and then that's when you blow up. Yeah, like those kind of trades.
That's exactly it.
Yep.
Because I can't tell you how often I see people promoting stuff that's exactly what they're doing. Okay, so where was I?
Yeah, and they don't know, and it's like, oh yeah, that's such a good scam actually. It's like, oh, look at these gains all the time. They don't really know the risks they're taking. That's really fucked up though.
Yeah, and that's exactly it. That's not it either.
She says she's a 36-year-old who's always been interested in finance. After graduating college, I worked in the finance industry onboarding very large hedge funds for a very well-known bank. Yeah, I have always been a self-starter and someone who wanted to do more for herself than just work for someone else. So I started trading. And she talks about she started playing poker.
I hear this.
At the World Star.
Okay, so here's what I wanted to show you guys. And let me pull up something else because I'm pretty sure Bold Analysis LLC Ninja Trader ecosystem. I'm pretty sure that they're in the ecosystem, right?
Nah, this is a straight up scam, by the way. This fucking Lauren this is wrong. I'm reporting this.
Are they in the? Oh, it shows me. It shows that right there. Why is that not? Okay, here it is. Bold bot.
Yeah, I'm watching your stream.
Okay, so she is on the NinjaTrader ecosystem. All right, just establishing that. Right, she shows up. Her bot is registered with NinjaTrader. Okay, so if you want to join the NinjaTrader ecosystem, which I've done, I have my indicators. You can get them for $10 a month if you are a member of the channel. Okay. Here here, they show you all the stuff about what you got to do. The listing agreement, media kit, and then there's professional and compliance guidelines. So because NinjaTrader is a broker, there are certain guidelines that they and all of their partners have to follow. So I'm not entirely sure. It seems to me, some people have told me that not everybody has to follow these guidelines. Like it's not like every vendor has to follow these guidelines, but because NinjaTrader is a broker, their associates do. Okay. Right. So some of the things that you have to and cannot do. You must balance risk versus reward in any statements made. Has she ever once mentioned the risk in any of her videos? I don't think so. I haven't seen in any of those. So here in this one, okay, so, well, I'll just read through these. Your promotional materials may not be likely to deceive the public. So we're already saying we think it's deceptive. Contain any material misstatement of fact. Okay, so that one we would have to prove. Mention the possibility of profit unless accompanied by an equally prominent statement of risk or loss. She is not doing this, right? Every video that she posts is, look at how much money I've made. And there is never any mention that you could potentially lose money or what the risks are or like what is the average loss that they get. In fact,
yeah, this is against that.
Yeah, and in fact, everything that I'm seeing from them is like you're going to win 90% of the time and your winners are going to be 5 times your losers is kind of the stuff that they're showing, which is like highly suspicious, right? Okay, include any reference to actual past trading profits without mentioning that past performance is not necessarily indicative of future results. Okay, so if we come back over to her TikTok, okay, risk disclosure is not on the TikTok. The website is, and there's the disclaimer on the website.
To about page, to the about page.
Here are the required ones.
Actually, yeah, let's read this.
So these are.
Is that just a copy and paste?
Yeah, this is basically this right here. I have the exact same stuff.
Select it and then right click search with Google, and then it will like show you where she got it from.
Oh no! The NinjaTrader gives you this.
Oh,
right.
Okay.
If you go to speculatorseth.com and you go to the risk disclosure page that I link at the bottom, same text.
Does this hold up?
Hypothetical performance disclosure.
Script. Is this the exact one that holds up in court? It's like
I don't know.
I want to look for one that's like exactly that.
Is educational and informational service. So some of this is a little bit different. Is not a registered securities broker or investment advisor. In no way warrants the solvency, financial condition, investment advisability of any of the securities. Does not assess, verify, or guarantee the adequacy, accuracy, or complete list of any of the information, the suitability or profitability of any particular investment, or the potential value of any investment or informational source. I should put that on there because that's one of the big things that I try to stress to people all the time that I'm always worried doesn't get through is like, yeah, I'm trading and I'm recording it. I'm not saying that like if you trade the way that I trade that you're going to make money. I'm not saying that you should trade the way that I'm trading. I'm just trading and recording it for my own purposes, and we've been able to create a community out of it, and that's it, because I've gone through periods And I mean, you can't hide from it because you can go back and watch on YouTube. I've gone through periods that were really, really awful. And you remember, because when I first started, it was like that summer was just awful.
I remember when you like you just had that really bad day and you thought that everyone was like, because you're losing. Maybe that's true, but like, you're like, this is bad. Like, I can't trade for like a very long time. I remember that day.
Yeah. No, that's every few months, there's a day that's just dismal. I think I've kind of gotten away from the really, really bad ones, but I haven't been trading my live account for a couple of weeks. I'm sure that if the pressure was on, I would maybe do those tilts still. Brandon Lima, there's no trading today. There was, but only the treasuries are open right now. The E-mini already closed.
They're open to midday, aren't they?
I think that the treasuries are open for another hour.
Oh, that's nice.
Yeah, what were you going to say before that?
Why don't you just put parody on your stream? Like, quicker. That's like, nah.
Well,
but you could just copy and paste that, but remove the bold analysis thing. Put Seth.
So when you come out in the account, it says this account is a parody and should not be considered investment advice.
A parody.
Yeah,
might as well.
But what I'm concerned about is somebody is really stupid and they come in and they don't click the profile and they just don't realize that it's a joke. So I thought, okay, maybe the best thing to do to make sure that people, realize what's going on is to just put this as a parody, in text on the video. I don't know.
Yeah.
I get the whole idea that it's kind of funnier for people to like it not say it at first and then they dig in and find it. But a part of the idea of Steve is I find it really frustrating that the more effort you put into making content that will really truly be useful to people, generally speaking, the worse that content will do. Things that are really complicated are really hard to market and most people won't watch them. And so especially on like TikTok, that content just does dismal. And meanwhile, the people that are really just do everything to promote themselves and tell everybody you're going to make money and look how much money I'm making all the time, those are the ones that get all of the attention, 40,000 followers, right? Yeah. So the idea with Steve is going to tell you everything that is wrong. So if Steve says something, you can basically assume that the right way to trade is the opposite of that. Right.
I really like that idea, actually. They're going to be like, oh, wait, you're making fun of it. Because that's what TikTok's about. You're like, no, you can like, on TikTok, you can compare like to the other person, right?
Mm-hmm.
You do like side by side, so you just do that of people. Just do parodies of those people. So do one with Lauren.
Oh yeah,
mimic her. Just do it to everyone, and then they'll see it. It's like, oh, and then you can be like, if you want to learn actually how to trade and not lose money, because there's probably a bunch of people that like I hear people like fall for this for like 3 times, like these gurus 3 times.
Yeah,
I don't think it's like a first time thing and they leave. Like,
yeah.
I think you can pick up those people. I mean, like, I don't know what the better word is, but
yeah, because a lot of them will be interested in it at first, and then they realize that it's a joke, and they'll start watching along. People will catch on. So, like, one of the things that I want to do, I'm not 100% sure the best way for me to do it, but like for the Laura thing, I think that what I should show is that it's really easy for a guru to come in here and kind of give you deceptive results. Right.
Yeah.
So I think I want to make a video where it's like, okay, look, here I made so much money, but then accidentally show one that didn't make money and like go and delete it and be like, okay, cut that part out,
I know, like inspect element, just change it. I don't know. Something like that.
Anyway, so we kind of got off track here. So go in the vendor guidelines. So here's another one that really concerns me. Okay. And when I say really concerns me, like I'm really cognizant about it now with the stream, and I see a lot of people doing things like this, contain any performance information, real or hypothetical, that has not been updated at least once every 90 days to remain current and relevant to the current market environment. So if you go out and you say, I've made money off of this strategy, you have to show it every 90 days. So that's when I realized, like, it was just all of a sudden it hit me. It was like, oh, anybody that wants to be a vendor or have some business on the side relating to trading would be stupid to actually show actually show results unless your business was being a CTA, right? And then being a CTA, you would want to show it every 90 days anyways. What?
Wait, so they show fake results then? They'll be stupid to show real results, so that's why they show fake results? Is that what you're saying?
Well, no. So here it says either real or hypothetical. So what I'm saying is that just even talking about performance is a liability. That's why you never see it happen. So it's actually the opposite. I believe that it is the opposite of what everybody thinks. Everybody thinks that if a guru or a service or whatever it was legit, that they would show you performance results of them making money. The reality is that anybody smart enough to really be making money from it and having a business on the side that gives it to you, which most of them wouldn't anyways, but if they happen to, so like somebody that I trust, okay, that has a side business in our industry, Futures Trader 71, right?
I was gonna say that. Yeah, I knew it.
Have you ever seen Futures Trader 71? I don't, not to call you out.
Of course I have. Of course I have.
I don't think he's ever shown results. I don't think I've ever seen in any of them him post like a broker statement or this is how I'm doing. I'm actually not even sure if he's actively trading. He funds other traders, but he's never shown the results from his funded traders. And why is that? It's not because they're not making money. It's because even if you show it, it's a reliability, because now once you've shown it, then you have to continue to show it every 90 days. And why would you want to show it every 90 days? You know, because
is he a vendor on Ninja?
Is Futures Trader 71?
Yeah, FT 71.
Oh, I don't think so.
Then why would he care about
I don't think that he's a Ninja Trader vendor, but because they are associated with a brokerage with EdgeClear, they're still going to be subject to those rules.
Oh, so these laws, it's not just Ninja Trader policy, it's just a policy that's exactly the same as the law, basically.
Yeah, as I understand it, it's like any NFA registered entity. If you're associated with any NFA registered entity, then you have to follow these rules.
But the law applies to them, right? It doesn't apply to like us, but it's only the policy that applies to us, company policy.
Exactly. But I would argue that if that's the standard that the NFA registered entities are put up to, that if you're really trying to be serious about this, that you should also follow those rules. So, but there's kind of like these gray zones, right? Like if I on a stream and I just show what I did that day, does that mean something that needs to be updated once every 90 days, you know? Versus like if I post on my website, here's how much I made this month, then you definitely have to do it, right? Let's see here, Mike. First Ninja vendor I learned from got shut down and fined with the CFTC. She was a huge fraud. Really? Wait, so who was it? Let's go look. He linked the press conference here. Barbara Cohen of Tarpon Springs, Florida, made false statements of material fact to CFTC staff, and that the website's Cohen Company Pure Reason promoted Pure Reason's trading software by demonstrating profitable trading results without disclosing that these results were based on hypothetical and not actual trading. And it seems to me that that's what she's doing. So now here's another thing. If you show the results for a day, or you show a back test, and you just don't say that they're live or simulated, is that breaking the law? I'm not sure, but I would argue yes. Go ahead. Ooh, you still there? You were going to say something. And I cut you off.
No.
Oh, okay.
Oh, well, no, I was going to say something. It was like, I'm wondering how much you would have got if you submitted that tip, the whistleblower tip, because when you do that, you get fucking, what do you get? You get like 30%.
Yeah. Well, there are people. So yeah. So here's the thing: is there are a number of gurus that I've come across that make claims like that, and I've reported them to the CFTC, and nothing ever happens. It just goes into a black hole. Like, you know what? Like, if there's one thing in trading, hold on. Nothing would make me more excited than the opportunity to talk to somebody at the CFTC Law Enforcement Division. If any of you guys ever come across anybody that works at this CFTC and can get me in contact with one of these people, I would be eternally grateful, because there is no question in some of these cases that I come across that these people are demonstrating profitable results without disclosing that those results were based on hypothetical and not actual trading. I see that a lot. And you report it and it just goes into a black hole. I assume because they get so many reports that they can only look at like the biggest ones. I don't know, because I'm kind of sitting here like, what are these guys doing? They must have more important cases, and all of these little scammers are too small fish for them to go and fry, you know?
Yeah.
But then when I look at it, that these are like accounts that have like 40,000 followers and stuff, like there's a good amount of money going through this sometimes.
Yeah, dude. They're also just going after like these gears, also going after like spoofers and stuff. Like one Aussie trader here in Sydney, he got like busted for spoofing the E-mini, like ES, for like years. And then they fucking extradited him to the US. And
Really?
Yeah.
They extradited him. That's interesting.
Yeah, he got locked up, and then he got like took months. He was like in prison for months waiting to like get transported to the US to face trial, but then he didn't end up face trial. He admitted guilt. Basically, his defense was that he spoofed the market to save him time on like when he would go get lunch or something. It's something so ridiculous. You have to see this, honestly.
Oh man. Well, so like, many people thought that
I needed to go get lunch, so I'd spoof the market so it fills my order faster. That's what he says, as in his defense. Oh yeah, so I can go get lunch.
That's funny. Well, you know, everybody made this big deal that like, oh, spoofing is common and nobody ever gets caught for it. So everybody kind of thought that it was like, even though it was against the rules, that technically it was okay, sort of a thing, you know? So here's the one that I'm like really not sure about. So here's the one that says, if you include any specific numerical or statistical information about the past performance of any actual accounts, you can't do that unless such information is and can be demonstrated to NFA to be representative of the actual performance for the same time period of all reasonably comparable accounts. And in the case of return figures, unless such figures are calculated in a manner consistent with CFTC Regulation 425 for commodity pools with CFTC blah, blah, blah. I think that this one is for CTAs, but that one is kind of like makes me think like, okay, like you just shouldn't say anything about your performance, you know? Then there's this one. You should not make guarantees of profit or success of any kind, or include statements that are presented as fact unless it can be proven that information as an indisputable fact. Right? And then the rest of this is just, you know, to do with NinjaTrader. say or imply that simulated historical test results are the same as actual past results. Include testimonials without being accompanied by a prominent disclosure stating that the testimonial may not be representative of the experience of other clients or customers. So here's this one. People will say, here's a member of my room and they made a ton of money today. Do they need to do that if they post it on Instagram? I think that they do. Right? So here's the thing. I think that some of these people could get hit by a number of organizations. But I also think in this lady's case in particular that NinjaTrader should be looking at that. I don't know. I mean, I should ask them some of these questions because it seems to me. Anyways.
Found it, by the way.
You're only allowed to spoof if you're a DMM or a HFT. Well, this is a different argument, Mike. Here's the thing: the way that these algorithms work is they are looking at incoming flow, and if they see incoming flow suggests that there is informed trading coming in against them, they cancel their orders. So is that spoofing? Well, at the time that those orders were entered, they fully intended on the orders being filled, and then they later canceled them. So I think that's different from when somebody intentionally puts something out there to make the market do something when they never intended to do it. Now, there's also those robots that try and fake people out, and those are like really short-term things. I think that those ones are illegal, but it's so common and everything, it's really hard to enforce. I don't know.
Yeah, I actually found the one where he says his defense. Oh god, this is great. Oh no.
Oh, do you have it over? You're gonna post it over here?
The article's locked, but wait. What? No, I'm gonna.
I just think spoofing should be allowed to let market punish them.
Okay, I found one. Yeah, here we go.
I would say that.
Okay, here we go. This is the one where he like puts the why he did it, because the other ones don't.
Okay. No, if the market wasn't anonymous, I would maybe agree with you, right? Like because then it's like if you spoof, everybody knows that you spoofed and they just know not to trust you anymore. But in an anonymous market, I feel like that it undermines the market. The Australian spoofer. When I first walked in the cell, I saw dozens of cockroaches on my bed. Zhao claimed he placed the spoof orders as a practical means of quickly closing out large positions before lunchtime or at the end of the trading day. Sometimes just to save time so I can grab a quick lunch, I often place those large orders so I can execute quickly and not have to wait for that time period. I mean, God, it's so good. He's probably telling the truth though, but it's not a very good. Oh man.
Yeah, look how much they had to pay. Look at the very bottom. The paragraph.
PropX agreed last month in response to Zhao's spoofing to pay $1 million to resolve an FBI and Justice Department investigation and another $1 million in a separate settlement with U.S. Commodity Futures Trading Commission. Wow.
Like, yeah.
That's not even...
Pay $400K for the victims.
Oh, really?
Yeah, in these other article, I think. That's
Jeez. But that's not even like enough. You could make more than $1 million on like just one trade. Well, yeah, I don't know. It'd be a huge trade for $1 million. But...
No. The $1 million is combined of criminal monetary penalty, criminal disgorgement, and victim compensation. So that adds up to the $1 million. Wait, no, they paid another $1 million. Wait, okay, no. Okay, they paid $2 million. I think the $1 million was to the CFTC for the victim shit, but it's like the FBI investigates this shit as well. So report it to the FBI, or anyone, any guru.
What's Mike saying here?
I found it interesting.
Oh, go ahead, finish.
I find it interesting that it's just why did they have to pay $1 million to the FBI?
Oh,
the
right.
CFTC investigates this stuff.
I don't know. Like, it seems to me that it's unclear to me, and maybe it's vague on purpose about in a particular situation which regulatory agency is involved in pursuing it. Like, there's the FTC and there's the CFTC. So, like, the Raging Bull guys, they got hit by the FTC, right? So, for these people, if somebody was really, like, running a scam, you report it to the CFTC or the FTC or the SEC or the NFA. And I've just taken the approach of report it to all of them. But I've never, for any of the reports that I've filed, ever gotten any kind of response. So I'm like, well, what am I doing wrong? Am I not filling the thing out correctly? Is it what I'm reporting not really a thing? Like, you never even get a response. It just goes into a black hole. And then it gets even worse as, you know, like the associated services, right? Like YouTube is really allowing their platform to be abused by like these fake guru types, right? And I've had situations where people were very, very clearly breaking the rules. And
open that
like,
article up, actually, while you
Sure.
talk. Sorry.
Yeah.
That talks about how long he was spoofing for at the very bottom.
Oh,
Before he
okay.
got caught. It's related to what you're saying.
Gotcha. But anyways, on YouTube, very clearly breaking the rules, and I know that I reported it, and I know several other people, as soon as they saw it, they reported it, and YouTube never did anything about it. Or Discord never does anything about it. Like these Discords where they pay their members for referrals, and so their members go around and spam all of the other Discords, you know? And nothing ever happens. The people with the money make the rules now, I guess. Mm-hmm.
At the bottom of the article, you'll see what else was that? The second bottom paragraph.
The U.S. authorities allege that as part of Zhao's spoofing conduct, beginning in approximately July 2012 and continuing through approximately March 2016, he devised, implemented, and executed a trading strategy involving E-mini S&P 500 futures contracts in which he entered large volume orders. He intended at the time he placed the orders to cancel before he could be filled by other traders, and which were transmitted to the Globex electronic trading platform that operated on the CME group server. Yeah, I mean, we've seen large orders lately, but I haven't seen anything in the E-mini lately that was like a really obvious spoof. Like once they started prosecuting it, it was like it stopped. It was kind of funny.
Yeah, you got time research, but he didn't actually pay anything because the company just paid it all for him.
No, let me answer, Jack.
He didn't lose any money. But it's like interesting. Like, apparently, they just go after like why don't they go after the people spoofing that are from the US? It's just like,
yeah,
it's only international.
I think that, you know, with a lot of these things, that there are some behaviors that seem to be so rampant, and these agencies are so underfunded and understaffed that they have to pick and choose what they're going to go after. And, you know, so they try and find one person that they think is like the worst offender and make an example of them and hope that everybody else stops doing it when they see that. So
yeah, I feel like they want to target like international companies. It's because like instead of their homeland.
I mean, maybe
like offenders from you know.
By the way, I didn't notice that the treasuries are moving much lower. Let me look at the volume profile here. How far is that compared to where we were the other day? Okay, so it's a retracement of yesterday's regular session up move, but 10-year would have to get below 29 for it to be below yesterday's low. So they're maybe still okay. Mike asks, have you read Norden's special book, the 1K one? No. I wish I had more free capital to just throw around.
Not in the market.
Yeah, I mean, I would probably throw it around in the market because, like, here's the thing, like we were saying earlier, right?
If you want to finish up the stream and you got an order pending, it's like, come
just
on,
spoof it. Yeah,
just spoof it.
Yes, but no, the more risk you can take on, the more you can potentially make. So, you know, I would like to be able to go and put on some irresponsible trades. Yes, I would.
That's the attitude.
But I'm still, you know, working with, you know, a few $1,000s at a time. And I don't want to just waste it. So I'm like super hyper cautious about it. And $1,000 for a trading course is a lot. And the issue with that one is that I kind of suspect that I already know most of the stuff that Gary Norden's course talks about. Although maybe he has some insights into some of the things that I do know that I just haven't realized and would be really important. So, like, I would really like to watch. I would really like to do it and make a review video about it, because there was a lot of controversy over that. Like, a lot of people that say, like, there's no way that this could be worth anything anyways. And there's a bunch of people that took it and said that it was amazing. And there was a bunch of people that took it and said that they didn't think it was very good. And it was like, well, maybe the person just didn't realize how valuable what they were reading was, you know? So it's like, I feel like that me with pretty well established, like, I'm not going to say that I'm an expert, but at least people are familiar with what I do know and don't know. Going through and reading that, you know, would be like a more useful review. So, you know, this is where I'm like, well, you know, I wish that I did have 100 people paying for the indicators a month and making $1,000 from it. And then that's what I would do with that sort of stuff, is I would start buying courses and reviewing them for you guys.
Oh, no. I mean, I bought one of your things, the Bitcoin one.
Oh, yes.
I got your Patreon. The Bitcoin ticker one is like the really old one. It's like from Coinbase, and it's like the Delta. This is like way back.
Oh,
years ago.
Yeah, well, you're talking about the Patreon?
Yeah, but like back in the day, an indicator that was like, it was like a little rectangle like box on your screen, and like show up all the fucking Coinbase trades, and it'll calculate the delta.
Oh, that was not me.
Of all that. No, that was you. You had something. No, you had something for Bitcoin.
Kyle says, I will pay for the book when I have money and tell you what's in there.
It's data from Coinbase, right? And it'll show up the delta. Like, it'll show.
That's interesting.
I can't believe you can't remember this. What?
I remember a couple of services that kind of showed us similar stuff, but I didn't make an indicator that pulled stuff from Coinbase. No, I don't think so.
No, it's GDAX. But the same thing.
Oh, are you talking about you're talking about the tape? You're talking about the tape. Yes.
That one. Oh my god.
But I don't think I charged people for that. I just put it out there. Oh, no, wait. I did charge. I put it only in I made it available on
Patreon, but
Patreon.
Yeah, and
I totally forgot about that.
So yeah.
Well, I've been so like, I just want nothing to do with the cryptocurrency stuff. I mean, it was
back in the day. It was actually good.
Well, I mean, it's
nothing like it, but now there's just so much data.
It's probably the wrong call, right? Like when my indicator never gave an oversold condition, but it gave a fairly valued condition, and you could have bought it on the fairly valued condition, and I suppose that you could be, take it past the overbought condition and take the risk and everything, and you would be fine right now and really happy and up by like what, 4 times your money or something like that, which, you know, if you're only betting like $1,000 at a time, that's not like a huge deal. But when I look at the industry and particularly the Tether situation, I'm just so fed up with it. I just want nothing to do with it. So I could probably be getting a lot more stuff from cryptocurrency and making some of those tools again, but I've just kind of like tuned out from it. Well, I have to check that later, Mike. So I did have one thought about the Gary Norton thing, though. One thing that to me,
market making thing. Please tell me about it.
Yeah. So the one thing to me that gives it credibility, aside from it coming from Gary Norton, is that they're so secretive about it. Like, he understands that the edge that you can pull from it is pretty narrow, and that it's not something that you just want out there everybody having. So when I read the Markets Under the Microscope book and the big model, you know what, I don't even have the right screen on here. The model that is kind of like for market makers, like the original, like everything kind of stems from this one study, is the Kyle model. And when you go in the Kyle model, one of the things that the Kyle model does is it helps you to calculate the optimum number of contracts to trade based off of what you believe the edge is, right? And when I started doing calculations based off of that, and my application of it might be like completely off, but when I started doing it, I was like, okay, like if it's regular action and it's moving, you could probably trade more than any retail trader could ever have, and you would be fine. But when it's like no news is going on and it's quiet, or it's, you know, before the open, anything more than like 100 contracts could impact the market. And, you know, if collectively all of you guys trading that edge were more than about 500 contracts, it would screw up the trade. So he worked for, you know, he did market making. I think that he understood those models because those were all, like, Kyle model came out in 1985. So that's when he was, you know, well before he was trading. So he's familiar with this stuff. He knows. And so that alone says to me, like, okay, he is looking at the more empirical market making stuff to base the advice on. And that's where I'm saying that, like, he might not say, okay, here's the Kyle model and here are the large implications that come out of it and things like that. But what he might do is he might come in and say, okay, you should, in this situation, you don't want to go against the momentum, or you do, or I don't know. There might be all of these kind of little situations that you could derive from the model, but he doesn't explain why they are. And so it might just seem like a trivial thing to you when you read it. But if you actually understood the models, it might be a more significant revelation than you might realize. So that's where I'm saying, like, a lot of the stuff that might be in his Norton's manual may not appear to be as significant to, regular day traders, but are actually more valuable than you realize. But I haven't read it, so I don't know. Mike asking, where can I read this research again? There you go. Yeah, I think Wynn gave a good link there. Let's click it and see what it is. This probably is. That is a lecture on it. But she's got the right keywords, man. If you search for Kyle model market making, you run into it. And it basically what the main thing that the Kyle model attempts to do is it says, okay, if there is flow going against you, where do you have to put your best bid and best ask to break even though the market is moving against the inventory that you have. And that's how all of these automated robots started. They kind of, the basis is the Kyle model. And then everything after that was just making the Kyle model more and more accurate by like factoring in the clustering behavior of orders and things like that. So anyways, man, we've yapped all over the place. I should send a message to the guys at Ninja Trader and ask, okay, like, are these things okay? And if people are doing this, do you want to know about it? Because I've seen, so one thing that I have been shown recently was a guru. Somebody would come into their chat and show a trade that they made, and they would point out that their trade was a sim trade. And the guru was telling them not to show that it was a sim trade. So he was knowingly telling people to misrepresent, not represent their trades as sims so that people would believe that they were live. So I saw that. That really bothers me, and I think is illegal. And I don't know. This is just these things all over the place. Oh, here's another one that I saw that was funny. I saw theoretical performance results that were being presented as though they were live trading, but it was really a back test. Okay. But the back test was awful. So the strategy was taking, like, in one day, hundreds of trades in one day. And it was so many trades that you basically might as well have just bought and hold the instrument, because they were taking every up and down move that happened in that instrument that day. And so it gave them really, really weird stats. So it was actually like the win rate was good. The win rate was like 60%. And the winners and losers were not bad. I think that on the averages of them sorted out to be the same thing, but the Sharpe ratio was negative, because it was basically, what that means is it was trading so much that the underlying instrument performed better than their trading. And so they were showing that, like, they had made money, but without realizing that the results that they were showing were really bad. Like says Seth, I would love to come on one day, the live chat. One day, my daughter is already awake. Oh, yeah, I get. So, for those of you guys that missed it, here in Discord. So if you haven't joined Discord before, I would recommend doing that. I know a lot of you on YouTube haven't done that, but there's a link in the video description, and you do have to verify your phone number. But here in Discord, we've got a channel down here called the Livestream, and you can come into the Livestream and listen, and then people can, like, raise their hand and we can call on you to come up. So Stick is the only one that's in there right now that joined us today. but especially on a day like today, I would love to have all you guys in. Kyle versus Kyle.
Joining from, like, the servers.
Yeah, I don't know. I mean, we've got 20 viewers today, and I'm sure that most people are, most of you guys are lurkers. There's like maybe half a dozen of you guys that really actively participate a lot, and there's like 4 times as many of you that never say anything, which is okay.
Like 8.
Are you Kyle doing his options simulations? I need to look at the one. So Kyle has been talking to me about, trying to do straddles and strangles on futures, options on futures. But I'm like looking at it, I'm like, I'm not even sure which broker I would use if I wanted to trade options on futures. I mean, like, I'm sure you can do it through Thinkorswim, but I don't know if you would really get good commissions over there, But it's an interesting concept. There are definitely
like,
some.
doing synthetic longs and shorts with the options. I like the idea of that.
Yeah.
Because it allows you for like some variation in price. So if you're like overall like bullish or bearish, but you don't want to take like a really specific position with the futures, you just go long synthetic, do a synthetic long,
Right.
synthetic short, and it like gives you like allows you like the price to vary like around the way you like entered. It's just like it's a bet on like the overall direction of the market instead of like more specific when you do futures, you know what I mean?
Yeah. No. Well, I mean, you can kind of change. The thing that's cool about future or options is you can't escape risk, but options allow you to specify which risks you want to take and don't want to take, right? So you can say, I want to take on the time risk, or I don't want to take on the time risk. Whereas in futures, it's like you come in and you have to have the directional risk and the time risk and all of these other risks, no matter what. But in options, you can kind of say, okay, I'll take out this one and take more risk on this thing, if this thing is the thing that you're really certain about, right? So for Kyle, he was saying that I have a pretty good idea that it's going to move more than the market expects, but I don't know when it's going to happen. Then I think that would be a good play for options. It's just, I think that you're going to find that the market prices out the degree of the move a lot better than you would normally think. But then you can do the opposite from selling. I don't know. Go ahead.
I don't know. I got this explains it better. I don't know if you got what I said from that. See how like when like your profit and loss at your entry, like at the strike price. If you click on the link, you'll see what I mean.
Yeah, I'm clicking it here. It's from Daniel's Trading. I haven't been to their website in a while.
Yeah, right. No, not really, but like
you are bullish on the market and uncertain about volatility. You will not be affected by volatility changing. However, you have an option on volatility, and that option turns out to be correct.
Opinion.
One of the other strategies may have a greater profit potential and or less risk, and may be traded into from an initial long call or short put position to create a stronger bullish position. So you're saying that
scroll down to the example.
Well, so I understand how these synthetics work. So what I guess what they're saying is that initially you don't have a whole lot of risk on it, and then as it starts going, you can cancel out one side of the trade and just let it run.
Yeah, that's what I'm trying to explain.
Makes sense.
Like, you see the scenario there, that explains it really well.
Normally, a trader enters into his position only as a follow-up strategy. Suppose a trader had a short strangle that he wanted to convert to a long futures. He can buy 2 calls. One liquidates the original short call. This nearly creates a synthetic long futures. However, it does so at different strike prices. The only difference in the risk-reward profile is that the flat area between the strike, where little is gained or lost. Gotcha. But it sounds to me like it's kind of hedging you against the volatility too. Yeah, it makes sense.
Yeah. It's just overall direction kind of thing. It's like for like bonds, apparently. I guess like I've heard of it like being used in that, in like the bond markets.
So what's Mike saying here? Here's a good study for options testing for live volatility. Abnormalities in thinner products through auction prices, which change the auction increment. There used to be a good game there. Not quite sure I follow what he's saying. What were you going to say, Stick?
Like, you know how the bond market is like very directional. Like, this is where I heard it's like used there. Synthetic futures, synthetic.
Right.
Futures. Yeah, that's why it's like, I guess, popular for it in the bond market.
Yeah, you know, it's the bond market is so weird in that respect, though, because anytime that I think, oh yeah, we should go long here, and then it will just for no apparent reason go down instead. You know, it does that stuff all the time. But there is a high, because the thing is in treasuries in particular, yes, there is a high degree of directionality to it, but it can be short-lived. It can be like a few days. Whereas some of the other commodities will really, really trend. Like when you come back and you look at the run that copper had at the beginning of the year, where the whole month it was basically up literally every day, you know? So pick your poison, I guess. There was a thread about this sort of a thing on Futures.io. In this case, they were talking about scalping. The thing is you know, scalping versus swing trading, like just changing your time frame, it doesn't solve your problems, right? It's just different problems. It all comes down to which is the risk that you want to take and make money off of, right?
The options kind of get rid of the stop losses as well.
Oh yeah.
Yeah, it makes sense.
Well, and Kyle was saying that for options on futures, that the margin that you need for the options is about the same for what you use on the futures contracts. So you don't necessarily have to have a ton more money to do it.
Yeah, and apparently with shorting, like with so like I watched this Tasty Trader research thing. It was about if you shorted the market, so the 2020 crash, if you shorted it with if you shorted calls instead of just buying puts, or shorting calls was shorting calls compared to just shorting the market outright, and it was like the same thing. Just shorting the call, you would have made the same amount of profit as if you just went short. Or maybe even something like that. Yeah, maybe even better.
Yeah, actually, but selling calls is
it would have been the same.
Dangerous.
So that's what they want you to do on Tasty. It's like sell volatility.
So Kyle,
that's not really selling volatility.
Oh, he does. Oh, so hold on. He raised his hand. Let's bring him in. Let's bring him in.
Yeah, bring him in.
Let's see if we get him. If we can get him in here.
Oh, everyone's coming in. You have to click accept at the top.
Yeah, once I click it.
Yeah, there you go.
All right.
Hey, and we can hear you. Yep, I can hear you just fine.
Sorry if my English sounds a bit rusty sometimes. I don't practice very often. I just listen to you guys on YouTube, and I don't have many opportunities to speak, you know? But
yeah,
I can just listen to you guys perfectly.
Yeah, I can understand you fine.
English is great.
All right. So you guys are talking about how some options positions can like be equal to some underlying positions, and I'm studying about that for like 2 weeks now. And that thing you guys are seeing in Daniel's trading website, that's exactly how I came across like one of my difficulties in trading, because I have like so many I can like write so many times I stumbled upon a situation in euro that I know that's going to be a big move, and I think it's going to be a move down, but if it goes beyond like a certain price, I often talk about lining the sands to sell, you know? And if it goes beyond a line in the sand, and then markets just do that big move, like the other way around. And I just get wrong, but I can I have risk management. I stop with a short stop loss, but then I can't join the move the other way around, because market just goes straight and there's no pullbacks, you know, because there's points in the market where big swings are going to occur because that's just so many people involved in the two-way trades, you know, like there's so many people that are going to liquidate positions up or down for certain price ranges, you know. And I can guess these areas, and like last couple of weeks ago, I just lost the trade because I got stopped out and market went like 100 pips in my direction. That in S&P would be like 60 handles, you know. And
Oh yeah, that always,
I knew that
yeah.
move was gonna happen, and I just got stopped out, and just went, you know. That's just frustrating. And then when you add like a synthetic long, that's exactly the effect you're expecting. That between certain price ranges, you don't have delta.
Yeah.
Right.
Yeah.
And you can set this price range to be like a portion of the move. If you expect a 60 handle move in ES, but you are unsure that where it's gonna you think, oh, it's gonna happen in 3900 area. Okay, but it could go to 3890 and then go up, and then you get stopped out and you lose the move. But if you place a synthetic long with a 20 handle range, like 10 handles up and 10 handles down, right? So you don't get shaken out. You just ride it
in that range. Yeah, and then when you go past that range, the gamma starts picking up, and then
and people are gonna,
and then the delta gets going, and then start.
And the first objection would be right, but you also got this up range that you don't gain as well. You don't profit from it. Yeah, but it's only 10 handles. If your move is large enough so that you can give up some portion of it in volatility, then you have an edge. You have a better edge than try to get the directional risk outright by going long on their underlying futures. But if you do the synthetic long with 10 handles of room, no, it's not even long gamma. It's neutral delta neutral.
Yeah.
In a certain range from the reference price, let's say 3900, you have the neutral delta 10 handles above and down, so you don't get shaken out.
You get long,
and then beyond that, you start to profit. And even better. I tried to do this in the underlying, like, I just got long, and if go 10 handles contrary to me, I just invert the position because so the big move is going to be down. I was wrong in the direction, but I still expect a big move. But if you do that, if you just revert long to short, you cash in this loss, right? This 10 handle loss. And if it's just the noisy movement, that movement up and down 10 handles that we saw last week, it was all over it. Yes, it was all over it, right?
Yeah.
And then at the end of the day, it just makes a 50 handle move, and you just lost it because you just get shaken out. So if you revert it in the underlying, you cash in the loss, and you still could miss the opportunity, because if it goes up again, you are short, and then you are losing again, and then you have to revert again and cash in another loss. If you just do a straddle, strangle, or you try to do the synthetic long or short, the disadvantage of a synthetic long or short is that you are only betting in one direction, right? If you do a synthetic long, if it goes down, you start losing, but if it goes up beyond that neutral delta limits, you start getting profit. But at least you have a chance to participate, You don't have a chance to participate when markets are just volatile and try to decide which way to go.
So hold up. So I have a couple. So first of all, some people have shown me some strategies where they're doing what you're talking about reversing. And this guy, he did quite a bit of work on it and actually tried trading it, and it actually did work, but it was the transaction costs that killed the strategy. So totally get what you're talking about there. Now, just to confirm what we're talking about here. So we're talking about this sort of a thing where, like, I'll draw here on the screen if you still have the YouTube up. When you got like a straddle sort of a thing, right? You say like, let's say that this is 4,000, right? You're talking about doing a strangle so
that's a strangle, yeah.
So that if we get above a certain price here and a certain price here, then the value of the overall options thing starts making money, right? So here's where I'm saying that there's like, this is where it gets, the part that makes me not confident about doing this kind of trade myself is you're going to be under for the transaction cost, right? This line right here is 0, right? And the difference between here and here is basically what you pay for the options, right? So in order,
but you pay it up front, but you only, cash in this loss if the market don't move until expiration. Because if you go long right now and you get out like a minute later, you won't get this loss below the X line, because you are seeing like a graph for the expiration date. But if you plot the graph like for today, it's going to be like a parabolic curve.
It's going to be more like this.
Touches the 0 axis. Like this. And as days pass, as days goes by, this parabolic curve turns into this shape that you're
let me draw it with a thinner line. So it's going to be more like this. Okay. So kind of what was getting at, or the thing that I find difficult about this trade. Let's forget.
I think 0, the bottom of this parabolic curve is at the x axis.
Right.
So you have no cost.
Forget about the parabolic curve just because it makes it a little bit more complicated.
Triangle into a
right.
But this spot from here to here on each side, say that's like 5 points or something like that. I mean, the E-mini probably would be higher, but the reason that exists is because the market is basically saying the chances of it going this far, of it going, this whole area over here and this whole area over here is low. And the market is pricing that it's not going to happen. So in order to make money on the trade, the market has to be wrong. And every time that I've tried doing these sorts of things, I've found that something like 95% of the time they do stay within that range. And that's kind of where there's some issues with it.
Yeah, I don't like the strangle. I like more of a directional pick. So the volatility skew is like, what's more expensive? Is it to go short with the options or to go long? Like I like with the if you were to do synthetic. Short,
right.
The volatility smile.
Yeah, I totally.
Okay. Yeah, of course you know.
All right. So sorry, you were speaking.
I know a lot about options in the theoretical sense, but I've never traded them. So,
I'm trying to imagine this in my mind because I haven't.
I do like though that usually when I'm trying to make a play like that, I personally usually do have an opinion on which direction it's going to go. So. I'm kind of like you. I like to go in and, take a call and then reduce my transaction costs by doing a vertical spread of some sort. When I was doing this in Sim, that's what I would do. And then that way you can keep yourself a really good risk reward, Otherwise, you're always stuck in this situation where it has to move a lot more than the market is expecting. And what is it that that is going to make it move that the market doesn't,
are you guys familiar with how delta works in options? How it's perceived? it's like people also say that delta is like the number that an option. It's a probability, yeah, of the underlying price getting above the strike price if it's a call, of course, and the expiration date, and that's measured by volatility and premium and such. So let's say I've stumbled across this dilemma where Seth says, "What if the market don't go beyond the strike price in a strangle, right?" Let's say you get an OTM call, and OTM, it's far from money, right? And the delta is 30, all right? Let's say 25, it's going to be better for the maths, So it's 25 delta. So it's going to be pretty far from the price, right? But I have the table here with reference prices from Thursday because the CME group site it plots the day before, right? That data, but it's just a reference, right? So the ATM call that has 50 delta, right? It's 4,010. If you get a 25 delta call, the strike price is 4,105, right? It's like almost 100 handles, right? What if the market don't go 100 handles in my direction? But what I came with this pretty good idea that I don't think market's going to go 100 handles. What if I think market's going to do a 50 handle move, a 40 handle move? A 40 handle move is a pretty normal move for the day, right? It just could be a day trade or just a short swing, a swing that you hold for the other day. So if I have pretty sure that it's going to have a 40 handle move up, what can I do? Instead of buying the 4,105 call with 25 delta and just sit there waiting and it never reaches that price and I lose all the premium, what can I do is I go long 4 of these calls. So it's like you are going 100 delta, because if you go long one call, you have 25 delta, but you go 4 calls, you just have 100 delta. It's like going long an S&P contract, right? Because the delta is like
whiteboard.
So hold on a second.
The lobby, yeah.
Yeah, so I got 3 things for you, and then you should continue because they're interesting. One, he posted a link in the lobby that's a whiteboard, so you can draw this on that whiteboard, and everybody can draw on it. That would be really useful. The second, the lobby channel.
At you.
All right.
Okay. The second thing is that I'm going to add Mike in here because he raised his hand.
Mm-hmm. All right, so this
and then I have to step away for a second to clean up the baby, so I'm gonna go quiet for a second. So Mike, you should get a button to accept now.
You guys see my
yeah, I can see yours. So this is mine. Make your tool a bit bigger.
I think I have. All right. There's delay in the light. So let's erase it.
And make just back undo with you. All
right. So
make your pen size a bit bigger, because like this, like make it big like this here. Right, like zoom out a bit. Actually, no. Not for, actually, Seth is not zoomed into that part. Wait.
Is this big enough?
No, just do it like this. Yeah.
All right.
Oh shit, that's too big. This is good. This is good here.
Is there like a eraser all?
Element eraser. So you click on the eraser, you click element eraser, and then anything you touch.
That's clear. All right.
Yeah.
All right. Let's do it then. So you guys can understand my idea.
Yeah.
So
just walked off, but yeah, draw it out and then you'll explain.
Yeah. So the x-axis it's the underlying price, right? So we have. We are in 4,000 now, let's say, right? And if we do a strangle, let's pick. I'm so bad at drawing. The mouse gets it even worse, right?
Fine.
So and there is 3900. So let's assume delta is going to be roguely like 25 for the calls and minus 25 for the puts, right? And I do a strangle. So a normal strangle, like it would be like set just did, right?
Mm-hmm.
And what's that net loss? It's the premium that you paid. If you in this call and in this put, you pay like X amount of points in the option and here, and that's the sum of the premium, right? And if it closes between 3,900 and 4,000 and 100, you lose everything. You lose the premium. But what if I expect a 40 move, so up to here? It's like a day trade, a long day trade, or maybe a swing trade of 2 days. But for it being cost effective, you need to buy OTM calls and puts. You can do a straddle, yes, but straddles are costly, and it has more time. It has more time decay and volatility decay than the strangle.
Straddle is this, right?
So,
that's a straddle.
Yeah, but that's at the day you buy. At expiration, it's more like
straddle is
that.
just like straight long or short volatility. It's like
So what I came upon the idea. This call has 25 delta, right? This one. So if the underlying moves 10 handles, it's gonna move 2.5 handles, right? What if I want to get long an ES contract and I come across that stop out problem that I just mentioned? We just get shaken out in the heat of the movement and it goes in your favor and we miss the movement. But this one, if I just play the call right, let's say I want to put a call out for just the call and wait for a 40 handle move and pocket the profit, I'm not gonna lose this part because this is at the day of expiration. If I put an end of month call, and the trade just goes for 1 day, I'm gonna like lose just a tiny fraction of, and that's measurable. That's theta. I don't know if it's the right pronunciation, but theta is like the time decay. And for at the money calls, it's one handle. So if you buy an option for the day, expecting a move, and it does nothing, it just don't move at all, you will lose just a handle. So it's like you have a one-stop handle, but it's a time stop. It's not a directional stop. So that's the first advantage, I would say, from the options. But you still have the problem that if market goes 40 handles that day and you were right, you won't make 40 handles because this call has 25 delta. So you're gonna make roguely 10 handles because you're gonna lose one handle of time decay, right? But what if I make a strangle with 4 of these calls and 4 of these puts? So I get delta equivalent of going long an ES contract because 4 times 25 delta, it's 100 delta, and going long the underlying is 100 delta. So what's the risk associated with that position? I'm gonna lose theta every day and volatility decay because as the contract goes near expiration, the volatility that people expect until expiration is going to be less. Like if it's 1 day from expiration, it just expects volatility from 1 day. That would be 40 to 60 handles in ES. But for a month, you expect like 300. All right. So that's all measurable. You have the option chains, the tables, and they give the grids, and you know that if by the end of the day my theory doesn't play out, I'm gonna lose a point in theta, and maybe half a
So
point
eight
in volatility.
contracts. 8 contracts equals a point
Yeah.
No.
Right. Four contracts. If you want to do a strangle, then you're gonna have to go long for here, for there. So it's 8 in total. So you that's like 2 stops. People are doing 4 handle stops, but if you expect a large enough move, it's still worth it. Because you get 40 handles and you lose it. Huh?
How long would you hold this position?
For the day.
For the whole day. Yeah.
Yeah. And
that makes sense, because you're not losing as many fees. Like what's the fee?
And it's the same as futures.
Oh, really? So then you don't really have to do as many like trades with like so you save on the fees. Isn't
there a thing where what they're pricing in for the move is really up until the expiration? So if you get and maybe that is where it ends up being at the end of expiration, but if like 70% of that move that they're expecting happens in one day, then and you're only holding the options for that one day, then you can potentially make money from it. Yeah.
Yeah, and you can even make more, because if market doesn't move that it's not expecting, you get volatility increase in the options as well. But if it doesn't happen, you also get volatility decay. So it's a two-edged sword. And that's another thing that I didn't mention. Let's say you are not day trading using this type of strategy. Let's say you expect 150 point move. You are a single trader. You think it's a strong support, and you think from there it's gonna go 150 handles, and it's gonna take like a week or maybe less to do, or maybe more. I don't know. Let's assume it's gonna be around a week. Maybe some more days, maybe some less days. So for 150 move, you're gonna expect that it takes some days, and you're gonna lose some premium, right? What if you just want to I want to like dampen this thing. I want to lose less theta, less volatility. You can do what banks do. They delta hedge. They zero the delta, because you don't need the complete 150 handle move to profits, because this is gonna have negative 100 delta, and this is gonna have positive 100 delta. You are net delta at the moment, but if it goes 40 handles up, this is gonna have like 90 delta, and this is gonna have 110 delta. You have plus 20 delta now, and you can just short 2 micros here, because 20 delta is like 20% of a mini S&P, right? So you got short 2. Yeah, it's
called long gamma scalping.
Long gamma scalping. Yes, that's the term. Thanks.
Yeah.
and then you pocket
delta, but you make a profit because you're long gamma. But if you're short gamma and you're hedging the deltas, you lose money. So
that's the burden of the option market makers, right? And that's strange, right? Sometimes some price reference just works like a stronger resistance, because these guys are like, they are building positions here, and they are buying calls and puts to hedge the delta
yesterday,
and they react to higher prices by shorting, because their delta are the difference between their longs and their puts, their calls and the puts are raising, so they pocket this, so they can be more efficient in his hedging. And there comes a day that markets just stops outright respecting that price and just goes boom, Why is that? Because the short gamma guy that gave liquidity to the long gamma, right? That every part has a counterpart. So the guy was building calls and puts, and some market maker was selling to him, and he's short delta. So there's this place in time that he can't handle anymore, and he has to hedge by buying. The short delta, the short gamma guy responds to higher prices by buying, not selling. So that's why it gets this effect.
Yeah, and that's gamma. Basically.
So I'm just opening it up so I can get options pricing on Thinkorswim on delayed data, and I'm just looking at it right now, and with let's see here, what did it do? It gave me a 40-30 40-25 strangle, and which I guess is the smallest difference because they're by fives. And it's pricing that for expiration, that the upside break-even point would be 40.79. And we're at 40.25 today. So,
but that's the break even at the expiration, and you have to account for if today you buy it like so the delta gets 100, so you buy more. It's like you are going long as prices goes up. Your delta is going long, and you are profiting. Of course, if it goes like 10 handles above you, you're not profiting 10 handles like if you went one ES contract long, because the delta difference is going to be 100. It's going to be like 10, 20, 30. Yeah. But if you expect a long enough move, it's going to get.
Like, here's the thing, like, market makers always gonna like price the volatility. Like, they lose money if they price the volatility wrong, basically. And so you're basically betting on them pricing it wrong. It's hard to find mispriced volatility, really. You can find mispriced volatility more in like longer longer term.
You won't make money if you do a straddle for 5 points, 10 points. That's for sure, because the delta difference would be so low that it wouldn't compensate your theta, your time decay. Yeah. So it's for big moves, yeah. When the delta difference gets big.
It's priced in longer term structures, yeah.
So because volatility, like, they measure like two-way round, right? But what if you know that the implied volatility is going to realize more up than down? Then you have an edge.
So I'm wondering here, if hold on, if I come in, sorry, my baby tried to unplug my camera.
Oh, that's how he's freezing.
That's why I'm frozen. Let's see. Let me fix that first.
I love that.
Activate. It's probably going to be purple now. Oh gosh.
So that's why you look so shocked, like, for a minute.
Right. I'll have to fix that later. But here on the screen,
Brandon just got surprised, like 60 handle, Jesus Christ! But I just showed like last month. I just showed a 60 handle move to you guys on Discord that I got.
Oh, right. Well, so like looking at today, it wouldn't be unreasonable to see them move to like 40.11, for instance. So on this one, if we were to take this trade and it moved to 40.11, we would make $740. So and then if it doesn't stay in there, you just would have to look at how much it decays. So I'd have to figure out how much it would decay in a day. Wait, well, we should be able to do that. Let's see here.
I have the link for you if you want it. And it's a data if you have the Greeks in your platform.
1 day step. Lines plus 1 day step. Oh wait, how do I?
It's like a point for I don't know which contract of these options are you in.
Okay, so it's saying, so you could risk $50 to make $750 on that if you thought that it was going to go to our first volatility target.
Yeah.
So I think that could work.
Let's say it don't go like that many handles. Let's say it goes. What's the delta of the triangle you did?
25.
What's the delta?
Oh,
25. All
100
right.
for
Let's say
four
it
contracts.
goes.
But yeah.
All right. Let's say it goes only 10 handles, and you hedge that delta, right? By growing, if it goes up 10 handles, you hedge by shorting.
You make money.
You make 10 handles with 25 delta. That's gonna be 2.5, but it's not gonna be 25 delta because it's gonna be the delta difference. So you should at least expect a move that the difference in delta between the long call and the long put gives you theta. So you don't have a loss for the day, and you wait for another day so the complete move finishes. So that's gonna be so we need to look at gamma, but I think gamma in a 25 delta. I'll have the chart. So it's dot 234. So for each point, the delta is going to increase dot 234. So for 10 handles, it's going to increase 2.34 in delta. So if you are in a strangle, it's going to increase 2 delta on the long call and decrease 2 delta in the long put, right? Mm-hmm. So you have match 4 delta. It still isn't a micro contract. So you have to expect a bigger move, like a 20 handle move. So it goes like the long call goes to 30 delta, and the short call, the long put, goes to 20 delta. Then you have a 10 delta difference, and you go short a micro contract to capture this delta. And so you are now short a micro contract, and it's $5 the point, right? You have to compensate for that theta loss that is one handle, but one handle in mining contracts, right? In ES. So it's $50. So you have to capture a 10 handle move with this delta hedge. So you can get like no loss for the day. So you don't need the whole 60 handle move for the day to get profitable. You just need enough delta handles difference that you can hedge. Yeah, so if you can hedge and compensate for that theta decay.
Would that be volatility going up or just staying the same? Yeah.
It will stay the same, yes, because 10 handle move
so if it stays the same, then you won't lose any money.
Right.
You shouldn't. Yeah.
And the cool part is that when you delta hedge, you don't have stop loss, because if you delta hedge at 10, 20 handles and market continues to go up, you still profit because you just hedge that little difference. But and so you have 30 delta in the long put and 20 delta in the long 30 delta in the long call, 20 delta in the long put. So you have 10 delta, you hedge it. But as price keeps moving up, so the long call goes to 40 delta and the long put goes to 15 delta. So you have more delta difference to hedge now. So you can scalp without a stop loss in this way. So that's another advantage. So your risk is time. Yeah, and you have time risk and volatility risk. I think it's far, far, far more predictable and far better than just guessing like, oh my God, it's gonna. So is it gonna revert here, or is it gonna revert 10 handles lower? And I just lost so many trades in ES because I just tried to get so precise with my entries, and market just stopped 5 handles above my entry, and I just watch markets goes, and I didn't even get in,
Yeah, they use it's like pick your poison though, right? So trading the way that I trade with the futures on very short time frames, there are some real edges in there that we can show empirically, but they're quite small and they're very competitive, right? And so catching the right spot and it being able to hold your risk and everything else like that is like crazy hard, right? In options, I think it's like it's a different kind of hard, right? Because you have to be able to go in and look at it. Now, maybe you're only looking at the E-mini and you're looking at one instrument, just options on that one instrument. That would certainly make your life a little bit easier. But you're going to have to go in there and look at what they're pricing in to be able to determine if, the risk reward and everything, it makes sense to take that trade. And, especially when you're talking about how the gamma changes and so forth, that's where you have to get into, I'm not quite sure where I show it, but that's where you have to get into like the Black-Scholes model, showing that. I'm sure there's a way to do Black-Scholes here in Thinkorswim, but I don't know where it is. And then you're basically looking at a bunch of different strikes and so forth to see if an opportunity presents itself where the options pricing makes sense for you to take the trade, So where I think the reason why I don't do the options is because I feel like I would want to have, I would have to write a bunch of stuff, to watch those, to calculate that out and show me that I actually have a good trade there. You know what I mean?
Yeah, they just give it real time now.
Whoa, hold up. Let Neff go first. Go ahead, Neff.
The Black-Scholes is in the risk profile of the Analyze tab, so at the top. So in the Analyze tab, so you click risk profile apparently. And then it's like, wait, what does this fucking Reddit say? Article say? Yeah, there's an option to choose the model in the risk profile setting of the Analyze tab. I think they also support the trinomial model. You can also
probability model. No. Metric. No.
What?
I don't see.
Click on the risk profile thing, or is it already clicked?
This is risk profile.
Little thing.
I'm gonna just watch now. I just talked way too much, and I'm gonna let you guys do your thing.
So let's see here. Let me try. Maybe it's already using that for some of these things, but I want to be able to see the how would certain things change if it moved to here in a certain amount of time and stuff. Oh, actually, I do see it. It's down here at the bottom. Black-Scholes.
Oh, your camera's covering it.
Yeah, it's down at the bottom.
Your big head.
Yeah, and there's the so I was kind of going through here and saying, okay, so what is the difference if I make it a wider strangle and so forth, and because I forget how those change it. It looks like the wider strangle changes the depth of the curve. Yeah.
Thing is, I don't think you can do this if the volatility. I reckon you need volatility to be crushed to be able to do this. You won't really get a good price in your volatility.
The
price in with the calls or whatever. But
the advantage of a wider strangle would be that you get cheaper options, so you can buy more.
I got you.
By e-market executing these.
So if I do that, you're right. It's cheaper. Not that much cheaper, but it's cheaper. 4020 was the most expensive one. See the yield. That's not the stuff. I think that you can come in and change some of these fields though. Oh yeah. So here we could say what happens if the volatility changes.
Well, I reckon you'd have to look at all the different options and see which specific ones, like which strike prices are mispriced. You have
Exactly.
to, like, look at them, like, yeah, and
And
it's, I don't know
you would
how
have
hard
to
it is
have
to do it in ES, and, like, spy options. I don't know if that's.
right.
I guess it's more liquidity, but I mean, that wouldn't really matter if you're trading that much money.
Yeah, and
Like,
so that's
Stock
another
options,
thing.
it's like, yeah.
If you come over here into the add simulated trades, okay, and okay, you go and you add it. Look at the difference. So this is the bid and ask for the whole strangle, and look at the difference, right? If you want to buy it, you have to spend almost $50, and if you want to sell it, it's $25, right? So,
Well,
yeah. So you really need a move to
what
make money off of it, right?
For which strike we are talking about this spread?
So this was just what the options prices were at the close of the day in ES. So this one is just doing the 40-25, 40-30 call spread or call strangles.
Mm.
And it's saying it's like a $25 spread.
It means they're not really confident in there, or like, if they, I reckon you could do it if the spreads were tighter, because that would be in there.
Mm-hmm.
Tighter the spreads, you would get, no more sure of the volatility, but what does
See,
that really mean?
I feel
The uncertainty of the uncertainty.
yeah.
Thing.
And the thing is here's the trade that I think would make more sense right now is just go and short the VIX, man. Like that, it's gonna reach that. It's gonna reach that 16.
Yeah, everything is shorting the VIX. Every trade goes. Everything just goes to shorting the VIX. Honestly, everything just leads to that.
Right now, at least. Yeah. Because they're going to get back to 16. They're at like 18 right now. I think it's going back to 16 before the summer.
I reckon too. I honestly do.
Yeah,
we would need to look for real time quotes, because man, if this is the spread, it's like, why would anyone buy the options, you know?
Well, yeah. So I had that same issue with so I tried silver options a few times, and I was just doing a straight call, and they were pretty cheap ones too, because they were expiring relatively soon. So the one time that I did it, we got the silver breakout, and that one was great. Right, that one worked. But I wanted to let it go till expiration, and then afterwards, it silver reversed, and so that I lost money on that one. But it was like that one day, because it opens up so dramatically higher over the weekend on the Monday. Then I think that option was like, I bought it for 50, and it was worth like 500 at one point, right? And then there's a spread on that, and you can sell it, and maybe you made like 450 or something like that, But when it's like just a regular day move and stuff, like there's that spread, so they're kind of accounting for it potentially moving a certain amount within that day. So it always comes back to, in order to make money on the options, the underlying has to move more than the market is expecting. And that's really hard to do. Why, especially in an index, right? Because how often really is it that really crazy up day that you knew far in advance that was going to be the day, You could have bought it there in the morning, and that was going to be the trend day that caught everybody by surprise, or vice versa on the downside. It's like, it's hard. And you do, I think you want it, because when I looked at the way that they would do it at the bank, they had all of these complicated models that were showing where a strike price was mispriced. So, I actually have from watch. Oh, are you still there? I think that my baby unplugged me here, because I can't hear you guys.
Options. That's why
Hold on
they're
a
going
second.
to expire today. Go to the end of month options, the last one in the list. I
Seth,
don't
you
know.
there? Can I speak? What was I gonna say now? But yeah. So like, you could do like a thing where it's like, okay, I want to go like, I'd buy it. You'd kind of do like, you'd have like your own auto algo to manage your orders, but it'll kind of be like a market making thing, providing liquidity. It's like, just put your bid in, and then your like algo is like decides whether like what finds like strike prices or markets and options. They're like, oh yeah, I'll take this trade, but only at that specific price. And your algo is like automatically calculates it and like moves the order around, and you just provide liquidity. I mean, but like, it's like,
Yeah, then you have
It's
to be
hard to
putting
do
limit
in the
orders in,
algorithm.
right?
yeah, that's what I mean. You can't if you can't do market orders, you're just taking liquidity. I don't know why
Yeah.
you do that.
And then you have to deal with the adverse excursion, which is like, okay, if somebody's willing to hit into you, why?
Yeah.
Now here's
God,
another
yeah,
here's
look at
then there is the mark to market trade though, right? This is the one that's the popular trade, right? Like when you look back on the history and you look at successful traders, there's going to be like waves of successful traders, and they're going to trade something, and then the edge of that is going to get arbitraged away, right? So in the late 90s, early 2000s, the trade was scalping the book, right? And a lot of people made money scalping the book. And then the robots came in and got rid of that, right? So the trade that exists right now is that there is a square root law where, because of the order book, your impact kind of decreases the more that you put on. And so ultimately you're going to lose money if you try and make money just from moving the instrument. But
So can you explain the law more? Because I don't really get it fully.
as to like
Very
why it
interesting.
happens or what
What it
the
is.
law is exactly. Okay, so the law exactly is the your impact. How do I draw in here? Draw your impact
Yep.
is equal to
Make it bigger. Oh no, don't worry.
constant
Don't worry about it.
times the spread times the square root of Q, which is the size of your order, over V. And the graph looks like this. It's a square root function, okay? So what it means is that as the size of your order increases, there is a certain point at which, at the beginning, your impact is linear. But as it goes along, it starts to have less and less impact, which means that
Really?
you're buying tons and tons and tons, and the instrument doesn't move, right?
Because they're like they know the price that they want to take. The market makers are like, yep.
Well,
It's
so there's lots of theories
Well,
about
what is it?
why it occurs, but in the book that I read, they showed a model that pretty effectively showed that this behavior can be caused by the limit order book itself. Okay.
Right.
So here's what you do. Don't use the limit order book. And that's what you've been seeing people do. So for instance, this Archegos blow up, what did they do? They bought these swaps, and the dealers were the ones that were owning the stocks, and they didn't have to own it. Right? And so now
they
they're
bought all the
able
swaps, and they didn't tell the banks, they didn't tell the dealers that they were taking all these different swaps with all these other dealers and banks, and they like had a bunch of fucking counterparty risks that they didn't tell them about. And I guess it's legal. I mean, it wasn't illegal
Yeah.
to not tell them.
Mike asked which book that was. I got that from the Markets Under the Microscope, but there's tons of different. That one is you're going to find really common actually, because this is basically how firms calculate their impact on a stock. Because to them, this is all cost. They want this I to be as low as possible, right? So what's happening now is that people are finding little tricks to get around that. like using the swaps in a bunch of different brokers, or using the mark-to-market rules. So if you can go in and you can buy a bunch of options, and then you can buy the options that are like really out of the money, so that and in enough size that you cause the market makers to start buying the underlying stock, you move the stock so much. And you do this like at the end of the day. That's why you see these end of day ramps. Then the next day, you have more margin because of the mark-to-market rules. So whatever you can get the close to be at matters for your mark-to-market rules. And then you can come in.
The options?
Yeah, they're literally buying the options.
Mark-to-market rules again?
Longer option, doesn't it?
Sorry, say that again, Kyle.
What's the mark-to-market rules again?
Okay, so the mark-to-market rules is this. You get like a certain amount of margin, right? Like say you have $1 million account and you've bought all of these options. And so now because you own all of those options, you've used up some of your margin, right? But what if your position is profitable, right? So you've made money, but you haven't booked your profits, right? So that money that you've made on the unrealized winnings could potentially be used to enter new positions, right?
Oh, I get it. It's a settlement when it's at the settlement price.
Right. So the way that they determine what your margin you can use for these really big guys is they use what they call mark-to-market rules, which basically means that they will assume that your profit is based off of what it was on the close of the day, what the underlying instrument was on the close of the day. So if you can get the instrument to close higher on that day, that means that tomorrow you can buy more options with that extra push, right?
Ooh, that's nasty. That's nasty.
Yes.
God.
And
Smart.
and the thing is that these market rules don't factor in this right here, right? Because if you were to sell that position at that exact moment, you would not get what the mark-to-market rules say they do, right? You would have an impact on the market and it would move the market against you. And the mark-to-market rules have this inefficiency where they don't factor in your execution cost, essentially. And that's what SoftBank and all of these guys have been taking advantage of. So if you can find those situations and ride them, that's the easy money right now, essentially. But there's a really big downside to it, and that is that if when it stops going up, if the momentum stops, then you've lost money on some of those. And then if you're too highly leveraged, you're going to have to sell some of your positions. And so that's why you get some of these moves where they unwind so quickly, right? Oh boy. Asher, do not touch the back of the computer. Hold on. You know what? It's actually probably time for me to get going. I think we had a good talk. And we can do this again. Maybe we'll do it on the weekend, although this weekend isn't a good one. But thank you guys for stopping in and talking with me. Yeah, this week I'm watching the babies, but we'll talk about it next week, and we can decide when the best time would be to do it. Yeah. Okay. Then I'll now close the room down. I think we can do this. I don't know how that works, actually. Anyways, I'm going to shut this stream down now, so stay profitable, friends.
I'm going to click exit